And good morning once again, options traders. Well, I got a good question from one of the traders in our group asking a Thinkorswim question. And I know a lot of you do use Thinkorswim, as a lot of traders do. And the question was, how do you separate profit and loss diagrams on Thinkorswim? And it's not real readily apparent how to do it. And what I'm talking about is on the Analyze tab when you're looking at a risk graph. Normally it combines them. So if you're looking at a covered call, it's going to show you the combination of the stock and the short call. But is there a way to separate them? And that was the question. And the answer is yes, it can be done, but it's a little tricky. Like I said, they don't make it real readily apparent. So for all of you who are using Thinkorswim, this will be a really good tip for those of you who like to separate profit and loss diagrams. So let's go have a look. As always, before we do, please be sure to click like and subscribe. Goes a long way into promoting the channel and is always greatly appreciated. So this is what I'm referring to give you a graphical look at it. Here's a covered call. So this is long shares of stock and a short 100 call. We see our bend right there at the 100. And this is the familiar risk graph that you're used to seeing when somebody talks about a covered call. But remember, it's really two separate positions. We have long shares of stock, that's where these positive deltas are coming from. And then it's the short call that's causing us to flatten out this way. But this is not what a short call looks like. It's not what long stock looks like. But yet that's what we're looking at, is the combination of the two. So what if we wanted to separate them to where we saw this? We saw the long shares of stock by themselves, straight line, dollar for dollar up, dollar for dollar down, and the short call by itself. This is what I'm referring to. And the question is, can that be done in Thinkorswim? And the answer is yes, but again, it's not real apparent how to do it. It's really a little hidden gem. So let's go pull up the Thinkorswim platform and find out how to separate your risk graphs. Okay, so now we're into the Thinkorswim platform, and let's go over to the Analyze tab, which is right here, and we'll go to Add Simulated Trades. So I just happen to have NVIDIA up here, so let's do a covered call with that. Click on the asking price to bring up a long position. So this would be the stock, right there it says underlying. So there is long 100 shares, and let's say that we want to sell a call against it. So we'll just pick the 485, that's where the stock closed. And if we click on the bid, it's going to bring up a short position. So there we go, let's line these up. So we've got long 100 shares of stock and a short call. But you can see that they're two separate positions. We've got them lined up here separately. But if we go over to the risk profile, there we go. It's exactly what we just saw on the presentation. Looks like our inverted hockey stick right here. But remember, it's actually two separate positions. So how can we separate them out? Well, the way that you do it, the first thing is you have to come up here to where it says lines +1 at expiration, and then click on single. And this will allow you to separate them out. Now I said earlier it's not real readily apparent, and now you'll see why. The first thing is you have to uncheck these two boxes, and then you have to check this little squiggly line right here. And there we go. There you can see the long shares of stock in blue, and there is the short call in kind of that pink color. And of course, if we want to see what it looks like through time, remember this is the current curve, so we can back it up, see what it looks like earlier, and then let's see, right there is expiration. And then of course we can zoom in, zoom out, do all kinds of stuff that we might want to do to see how these positions are reacting or relating to each other. So for instance, we can see that at this point, we're going to flatten out, because from this little bend forward, we have negative deltas, but the stock is always positive deltas. So they're just going to cancel out. So we can see that from this point forward, we're just going to go flat. And that's what's creating that risk graph that we saw before with the combined position. So if we wanted to go back, we can unseparate them, and there they are. That's what the combination of the covered call looks like. So this is just a short video to help help all of you on Thinkorswim. It's a question that came up, and I thought, yeah, it's kind of a good question because it's something that a lot of traders don't know that can be done on Thinkorswim. Like a lot of things on Thinkorswim, they've got a lot of hidden gems in there. So hopefully that helps and makes a lot more sense for anyone looking to separate their risk graphs on Thinkorswim. And for anyone who'd like to learn more about the art and science of options trading, please check out the Alpha Trader course, Strategy Lab, and a brand new candlesticks and technical analysis course. It's all at optionsatoz.com. Also, please join us on Options A to Z's Facebook trading group, and you can find a link in the description below.